So traders, I've been working with ChatGPT and I've been looking at similar times that's been happening in the past 100 years to what's happening right now. And if there's any analogous situation that's happening, and I've been looking at the 1930s and 19 today or 1930s and 1970s, and then also what's happening today. And check this out. There is 1, 2, 3, 4, 5, 6 when it comes to the tariff talk, when it comes to what's happening right now with the interest rates. So that's what I want to cover with you in today's video. So quick disclaimer, and then let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, just a quick heads up. I'm actually giving away free access to my Mastery Trading course for a limited time. If you go to johnsfreegift.com, or there should be the first link in the description. Alrighty traders, so let's get straight into it. So let's actually check this out here. So with the stock market right now, with the overall S&P 500 and the overall stock market, it's very difficult to know what's definitely going to come next, right? Like we all do know, like we have no idea what's going to come next. So we're trying to see what could be coming next. And the way we do that overall is what we go back in the past, right? Who said that? Who said the further we can look back in the past, the further we can look in the future? Was it Ray Dalio? Maybe I credit him for it. So the big thing I'm watching for right now, a big thing I'm looking at here is this. So this is all here. So this is the 1930s and the 1970s analogous to today. So the similarities of this, right? So 1930s, we started off with the trade war, right? So we had global trade war. 1970s Nixon, we actually started off with more trade war, and then obviously what happened with Trump today, right? 10% global tariff. So I went back with ChatGPT and I said, show me the times back in the last 100 years that we've had trade tariff wars, and what was the time for that? So we went back through the similar times, right? So 1930s, deflationary initially, but food and import costs surge post tariffs. Well, that's what's happened right now, right? We've definitely had that today, right? Double-digit inflation due to oil plus policy and sticky inflation, driven wages. And we also do know, like this whole food cost, we do know that's happening right now. Monetary policy. Fed was slow, then too tight. So, right? Fed was behind the curve, and then it had a Volcker pivot came later, right? So the Volcker pivot was what? It was a massive inflationary spike late. That was the late 1970s, right? Towards the end of late 1970s, that's when gold went ballistic. I believe we're going to go through that again, by the way, but not until we see what's happening here. What's happening right now is Fed is cautious, delaying cuts, especially when it comes to the uncertainty of what's happening right now, or compared to what's happening with the uncertainty right now. So look, check this out. So we're looking at this level 3 as okay, we said we know this is what the Fed does, right? They're slow, then bam, they go hard. And then they go too tight, and then recession. We actually had a big contraction back in the 30s, right? Stagflation, slow growth, plus high inflation in the 70s, towards the late 70s. Growth slowing, yield curve still inverted, right? I think it's uninverted right now. So recession definitely at risk here, and looks like we're definitely heading towards some sort of recession, right? When it comes down to the overall markets and the overall economy. We're definitely now a recession's not, we could go through a soft landing recession, which I do believe, by the way, we're going to go through a soft landing recession. And the reason why I say that is because the Fed's going to keep printing more money, right? They're not run out of bullets yet, right? The Fed will keep going and keep going and keep going until it breaks. And then in the 1930s, then that's when it's going to be going crazy, right? So this is where I still see we're going to go through a $10,000 gold, but not until we see a bit of a drop in the first place. I don't believe we're going to see a $10,000 gold right now. I believe we need to see a bit of a correction first. Too many people are bullish gold right now for it to continue going much, 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 much higher, right? Big moves come out of markets when people are not focused on them. Make sense? So we have that through that. Then we have the debt levels, right? Rising for Vietnam and war. And we know what's happening here, right? 120% of GDP. Now, when it comes to debt levels, people are like, the debt's going to explode. Do you know that's been like a decade saying? Right? And then election year volatility, right? Hoover, Watergate, and then obviously what's happening with Trump right now. So we have a lot of things that are lining up because every time there's been trade wars in the past, it's been pretty bad, right? So here, check this out. So what history suggests could happen. In today's environment, continue to mirror 1930s, 1970s playbook. Tariffs, inflation, weak, confused policy response. Then a sharp market correction is highly possible. 30s was 86%, 1970s was 40%. So the whole thing about this is, right now Trump is really sort of backing off when it comes to, they're starting to slow down with the whole tariff thing. But if Trump starts to really ramp that up again towards the end of this year, it could be really, really, really bad, right? What makes today potentially worse? Record debt means the government has far less room to stimulate with spending. We see what's happening with the global and so on and so forth, and obviously AI tech rally has made markets top heavy, vulnerable to sharp corrections. And so we look at that through here, and we look at all these different markets from here, like the Nasdaq and the S&P 500 and stuff like that. We can definitely see that right now we're definitely not ready for another big move to the upside, because I'm wondering, like, what is coming next? What is coming next? Are we getting ready for another move to the downside? Paul Tudor Jones actually suggested that, right? So Paul Tudor Jones actually suggested we're getting ready for a move to the downside. If we are getting ready to move for the downside, right here, then maybe this is just a bit of a fake out before we start to see this, right? So we can see this high. Are we getting ready for another move to the downside? Paul Tudor Jones said we're probably going to see this move start to come down through to here, and then maybe get another rally, right? Which would be a move down to this level through here. So maybe we have another move to there, but it doesn't look like we're going to see a really big significant crash, like a really big bang crash. If we get moved down, we're probably only going to see a move down to new lows. Paul Tudor Jones actually said this as well too. So if we do get a move down, we're probably going to come down to here. Guess what's going to happen here? Fear and greed index. That's it. Recession talks are back on. Blah, 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 blah. Buy. Buy, 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 buy. Buy, 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 buy. You I can't talk today. You know that's what that means, right? Right? Bit of an FYI. Here's the fear and greed index. Right? Class in session. If that happens again over the next 12 months, meaning if we get this Dubulaki guy, down the bottom here, ultimate fear, extreme fear, recession talks, that's it, it's all over, that's the market's gonna crash, oh my goodness, oh my goodness, I'm gonna crash, buy it, right now, oh my goodness, we're going to the moon, gold, you gold bug, go to the moon, here we go to the moon, sell it, get out, run, right, especially with the gold. I know I'm going to get some flack, right? So this comes down to all different markets, right? Even like the Dow Jones. The Dow Jones is the one that is still sort of hovering around. It's still hovering around this level 3. Now, the interesting thing I'm seeing right now is this, right? Is we're starting to see this moving average have a bit of a rounding top formation. Look at this here, up and then down through there. Ooh, that's actually not good, right? Because look at this here. Every time we've gone through a big bull move, moving average has been trending up. Big bull move, moving average has been going up. The moving average is going down right now. Ooh, what does that mean? Right, what does that mean? So looking at this levels from here, maybe we are getting ready for a drop to the downside. Because again, whenever we go through these big moves through here, what was the moving average doing? Up, up, up. If the moving average is coming down, that's more conducive to what? To this guy through here. Are we likely to start to see another repeat? Now, once again, if we do see another repeat and we get another drop to the downside, we can see here that what potential could make this better? The Fed has more tools and data than 1930s, 1970s. Markets today are faster to react and investors are more adaptable. If Trump moderates tariffs implementation or uses them as a bargain tool, this could basically see the exact same thing as 2019, more than 1974. Because 2019, I'm pretty sure, let's go to here. Yeah, so 2019, you can see what actually happened here. The market fell by 20%, right? But then quickly recovered really quickly. So we may be seeing something like that. We may be seeing a bit of a shake and bake right now. And then maybe towards the end of this year, we're going to see a really big movement to the upside, right? When tariffs came into isolation and were resolved quickly, 2008, 2019, markets rebounded sharply. When tariffs combined with inflation, recession risk, and poor monetary fiscal response, 1930s was that situation from there. And that's what we probably could see there right now. So this is what I wanted to share with you today, guys, when it comes down to all of this data through here. Really interesting, guys. Leave a comment in the section below. Let me know what you think right now. Again, I'm just doing my research and I thought I'd just share this with you. Let me know what you think in the comment section below right now, guys. And if you did make it this far, then I want to give you a bit of a gift. I'm actually running a 95% off sale to my private coaching program. I'm not going to put the link in the description below, but if you go to johnsprivatecoaching.com, so that's, or that should I say, that's John's that's johnscoachingsale.com. johnscoachingsale.com. If you go to John's JOHNS coachingsale.com. Again, I'm not going to put the link in the description. It's only for people that watch the end of the video. You'll be able to go over there and you'll be able to actually see where I'm giving away 95% off to the Inner Circle program. That's actually ending real soon, so you'll be able to see the details over there. So go to johnscoachingsale.com right now, and I look forward to seeing you real soon.